week 4 for Nasdaq futures. So today we're gonna review last week's price action, starting on the weekly chart. So on the weekly chart we can see that last week we had an up-close week, traded inside this bullish order block, and we traded all the way up. On the daily chart, we don't have Monday because Monday was a bank holiday and the market was closed from 1 p.m. till 18 p.m. So Tuesday is the first daily candle. We opened, traded down into this bullish order block, rather a bullish propulsion block, and we traded all the way up. Wednesday we had a volume imbalance over here, opened, immediate rebalance of the volume imbalance, creating the high, just fell short of trading into this high, but trading into this buy side imbalance, sell side inefficiency with volume imbalance and liquidity void, and a sell side imbalance, buy side inefficiency, and the rejection block over here at this candle's closing price. So Wednesday printed the high of the week, and when we go to the lower time frames we can see that Monday created the low of the week. We had a bank holiday due to Martin Luther King's Day. It was also the inauguration of Donald Trump, the main headliner for last week. On Tuesday we didn't have any high or medium impact news, same for Wednesday. On Thursday we had an 8:30 a.m. Report. On 11 a.m. we had a report, and 12 p.m. we had one medium impact news driver. On Friday we had 9:45 PMI number release. At 10 a.m. we had existing home sales and the revised UAM consumer sentiment. Let's go back to the chart for Monday. Beautiful chart, but let's add some annotations, starting with new week opening gaps, new day opening gaps, midnight opening ranges, and the first presentation of Monday. Okay. So on Monday, price opened at $21,565 per contract. After the midnight opening range was established at 0:30 a.m., price went into consolidation, waiting for the 1 a.m. macro. We traded above the midnight opening range, retracing into the midpoint of the midnight opening range, which was also the new week opening gap high of December 22nd, 2024. Buy side delivery took place into the 2 a.m. macro. We had some accumulation inside the new week opening gap. This candle's close over here already told you that price was likely going higher from here rather than reversing. Beautiful retracement into 3 a.m. macro, and we traded up, creating, engineering sell side liquidity below this low here. 3:30 a.m. macro took this sell side liquidity, trading all the way back down into the new week opening gap low. Look at the bodies, new week opening gap high. And for the rest of the London session and London lunch, price consolidated. After 7 a.m. we had sell side delivery, trading into this new week opening gap again, displacing below it, trading back into new week opening gap, consequent encroachment of this week. We traded down back into the midnight opening range low, waited for 8:30 a.m. What do we know about 8:30 a.m.? That IBDA is seeking for liquidity from this time forward, which happened over here. Sell side liquidity was taken again into the new week opening gap. Into this new week opening gap, fell short of trading into this new week opening gap, but into event horizon over here, and displacement occurred. Price retraced but fell short of trading into this new week opening gap, but traded inside this discount wick consequent encroachment, and buy side delivery took place. Just fell short of trading into new week opening gap over here, retracing back into this buy side imbalance, sell side inefficiency, displacing up one more time at 9:30 a.m. We opened here, retracing into the new week opening gap, consequent encroachment. What do we know about the opening range from 9:30 a.m. till 10 a.m.? That price likes to deliver a Judas swing or manipulation. What happened over here? So we traded up, creating the intraday high into, let me see, into the PPR on the daily, which we were monitoring. Yeah, just beautiful. High time frame premium array was reached here, displaced to the downside below first presentation after 9:31 a.m. Over here we close below it, retracing just outside of it. Why would price do that? Because here is a sell side imbalance, buy side inefficiency, trading back down into the new week opening gap, and note how these levels are used by IBDA. Okay, so we took sell side liquidity below this low. Beautiful price action, creating another low. Yeah, and that was mainly it for the Monday session. Okay, after 6 a.m. So the market was closed from 1 p.m. till 6 p.m. After 6 p.m. new day opening gap was formed, trading back into the first presentation of Monday, and at 8 o'clock, exactly at 8 o'clock, the low of the day was reached, of the 24-hour day. And if you ask me, I think that at 8 o'clock some buy orders were filled here, because as you can see, this was the low of the week. Okay, if we go back to Monday's price action. Yeah, so what you're looking at over here is the midnight opening range of last week's Thursday and the new day opening gap of last week's Thursday. Just a beautiful confluence of two levels coming together. And note how the low is formed here. Coincidence? Okay, if you want to believe that. But I don't believe that. So, on Tuesday, the market opened at 21,607.75, creating the midnight opening range. We traded all the way down into the negative 1.5 standard deviation measured from this midnight opening range. Okay, at 1 a.m. macro, we created a beautiful swing low over here inside new week opening gap low of this week. Trading all the way up, deep retracement into 2 a.m. macro. And that's where price started to accelerate to the upside. At 3 a.m. macro, note how beautifully the midpoint of the midnight opening range is used, and buy side delivery was next. Into the new day opening gap for today. Note how we trade into consequent encroachment over here. Have a beautiful retracement, closing above the new day opening gap. Note how the bodies stay inside of it. And buy side delivery inside the new week opening gap. Just past it took place. Yeah, just beautiful at 5 a.m. macro. Okay, between 5 and 7 a.m. we had some sell side delivery, taking some stop losses below this these relative equal lows over here into this buy side imbalance, sell side inefficiency on the 1 minute chart. During 7 a.m. macro, must be random, right? Buy side delivery was next. Just fell short of trading into new week opening gap, retracing into new day opening gap for today, and the bullish inversion fair value gap over here. We traded up into new week opening gap. Manipulated just above it during the 9 a.m. macro. The high was created over here. Time distortion took place until 9:30 a.m. which was over here. So at 9:30 a.m. we had a huge premium opening range gap of 126.75 points. So normally when there is a large opening range gap larger than 120 handles, we expect upwards continuation, but in this case IBDA closed the entire opening range gap, trading back into new week opening gap, an old one over here. Look at the bodies, just beautiful. Between 9:30 and 10 a.m. the opening range was established, with this low carrying sell side liquidity below it, and this high buy side liquidity above it. So after 10 a.m. we had one more manipulation into this opening range low, into new week opening gap, and note how the wicks respected the new week opening gap high over here. We traded up. Note how the bodies respect the midpoint of the midnight opening range over here, which is the purple shaded area. And displaced to the upside. Note the accumulation taking place inside the lower quadrant of the premium opening range gap and the midnight opening range over here. And sell side, buy side delivery was next into the intraday high over here, above this Asia high from Monday. Oh. Okay, retracing back into new week opening gap and the opening range gap high during the PM session, and 15 PM macro we reversed to the upside again. Note how IBDA is referring to the first fair value gap on Monday after 9:30 a.m. And that was just it for today. So yeah, if you managed to sit this consolidation out, there were just some beautiful long opportunities over here, but there was no news, so a high resistance liquidity run was on the horizon, and note how that took place over here. So on Wednesday, Nasdaq opened at 21,869 even, creating the midnight opening range. Sell side liquidity was offered first into the 2 a.m. macro, into, let me measure this. Yeah, just past the -1 standard deviation level measured from the midnight opening range over here. Time was right, 2 a.m. macro, start of the London kill zone, trading back up into the midpoint of the midnight opening range, into the first displacement inside the midnight opening range, retracing back up into this busy during the 3 a.m. macro, and buy side delivery was next. We displaced above the midnight opening range, waiting for the 3:30 a.m. macro, trading back into the midnight opening range high, and buy side delivery was next, creating this beautiful London session high over here. Just a beautiful bread and butter setup, if you ask me. So after the London kill zone, price retraced one more time into the midnight opening range, and buy side delivery was next. At 9:30 a.m. we had a huge premium opening range gap of 156.25 handles, so we could anticipate continuation of the uptrend which occurred. So at 9:30 a.m. we opened at this candle, 9:31, creating the first presentation over here. Let me annotate something. Yeah, there it is. Okay. So we displaced to the upside. We expected buy side delivery due to the large premium opening range gap. Traded up, retracing back into the first fair value gap after 9:31 a.m. Trading into event horizon between these old new day opening gaps. Tracing back into this buy side imbalance, sell side inefficiency, and also inside the new day opening gap over here. Note how it is used over here during the 11 a.m. macro into the discount wick consequent encroachment, which is around here. And buy side delivery was next, with the terminus reached inside the 12 p.m. macro. Okay, so London was upside buy side delivery. New York AM session was just a continuation of the London session, and the PM session was a complete reversal into the first presented fair value gap again. So if we take a look into Thursday's price action, the AM session was a difficult one to trade if you ask me, but if you look into the price delivery on Thursday, it was, yeah, I personally love it. So let's dive into this. Okay, at 0:30 a.m. the midnight opening range was established between this candle's low and this candle's high over here. The first displacement leg is this leg over here, the sell side imbalance, buy side inefficiency, including the volume imbalance over here and the volume imbalance over here. Note how price trades into the first displacement high, displays to the downside into this first fair value gap on Wednesday, so the day before Thursday, trading back into the midnight opening range low, trading back to consequent encroachment of the first presentation of Wednesday, tracing back into the high, sell side delivery was next. Note how the midnight opening ranges, multiple midnight opening ranges are used throughout the week. So this midnight opening range is Thursdays, and this one is the one on Wednesday. And note how beautifully price refers back to these midnight opening ranges. So after 4 a.m. we had some consolidation, waiting for 8:30 a.m. At 8:30 a.m. we had a high impact news driver. First we took out buy side liquidity above these highs over here into these relative equal highs, retracing back into the midnight opening range high between 8:30 a.m. and 9:30 a.m. and from 9:30 a.m. onwards we had a discount opening range gap of 94.25 handles, which is between 75 and 120 handles, so that's the gray area as ICT refers to, because price can do both things. It can either go up or it can go down, so it's not that that useful if you ask me. So at 9:30 a.m. trading back into midnight opening range high, trading up over here, first presentation. What is happening over here? This is a fair value gap where price spends a long time in trading back and forth. So that's indicative for a difficult range to trade, a difficult session to trade, I must say. Okay, so at 10 a.m. macro, at 10:06 a.m. we displaced to the upside, displaced above the first presentation. We waited for the next news release, which was at 11 a.m. So what do we know about news releases? After news release, manipulation or Judas swing is likely to occur. So what happens over here? 11 a.m. sell side delivery into the first presentation, which is just a Judas swing, and trading up into the midnight opening range of this week. And note again how this first displacement is used by IBDA. Okay, at 12 p.m. we had another news driver manipulating to the sell side into the first presentation again. Look at the bodies respecting it. Oh, just beautiful if you ask me. And then at 37 past 1 p.m. we traded back into the new day opening gap, which is an overlap with another new day opening gap, so that works like a black hole for price, and price is just attracted by it, as happened here. Note, it was also the closure of the discount opening range gap. Okay, so we retrace all the way down into the opening range gap, consequent encroachment into the first presentation of Wednesday. So note that even the next day, price IBDA still refers back to the first presentations. And note where and when the high of day is formed. Just 1 minute past 16 p.m. So that's the 16 p.m. macro, which is the end of the true day. And what do we know about the true day? That 9:30 to 10:30 a.m. tends to create the low of the true day session between 9:30 and 16 p.m. And 15 p.m. till 16 p.m. tends to create the true day high. So this is just a beautiful example of true day buy side delivery. And if you use the new day opening gaps, new week opening gaps, midnight opening ranges, first presentations, and the opening range gaps in confluence with these time principles, yeah, then magic occurs on your chart. This is just magic if you ask me. So that's it for Thursday's price action. For Friday's price action, we add this beautiful midnight opening range gap, midnight opening range again. So sell side delivery was first into the new day opening gap between this level over here and this level over here, and the other new day opening gap between this level and this level. So again, that is an overlapping, two overlapping new day opening gaps, which work like a black hole, and it happens throughout the whole week. So that's beautiful if you ask me. So at the start of the London session, price manipulated, creating the session low at the 3 a.m. macro. We expanded towards the upside, had a very deep retracement over here into the rejection block over here. We displaced to the upside at 4 a.m. macro into the new day opening gap for today, which was formed on Thursday. We use it on Friday. And then just look at this. So traded into the new day opening gap. Note how the body stayed inside of it, which is indicative for price going lower. So price went lower using all the midnight opening range levels and the first displacement leg into the new day opening gap high over here. Trading back into the midnight opening range high, midnight opening range low. Notice how the body is respecting new day opening gap again. Close above it. Retracing back into the new day opening gap high. And buy side delivery was next. Price just fell short of trading into the next new day opening gap. And sell side delivery was next. So going into the New York AM session at 8:30 a.m. price traded from this new day opening gap low into the first displacement into the midnight opening range, obviously. Note how the bodies respected it. So buy side delivery was next, and note how we trade back into this. Buy side delivery into the new day opening gap, retracement after 9:30 a.m. So at 9:30 a.m. we had a tiny premium opening range gap of 19 handles, which can be indicative for a slow, choppy and fickle AM session. But today, for Friday's price action, that was not the case. And later on we will dive into why that was not the case, but for right now, just look into the price action. Okay, at 9:30 a.m., what happens first? Trading back into the displacement, the first displacement inside the midnight opening range over here. So buy side delivery was next, created the first presentation over here, closed above it, trading back into new day opening gap, into the next new day opening gap, taking these pre-market relative equal highs and these Asia session relative equal highs. So Monday had an up close, Tuesday was an up close as well, and the same for Wednesday and Thursday. So that got me thinking like, okay, if 4 days in a row price was bullish, then Friday can be expected to trade back into TGIF levels. So inside the 20% and 30% of the weekly candle. And let's take a look if that really happened. So at 9:45 we had the first high impact news driver, retracing back into first presentation, trading up again, taking this buy side liquidity pool. We had a beautiful busy over here, displaced below it, into new day opening gap, retracing into the bearish inversion fair value gap over here at the next news release at 10 a.m. Traded back into this up close candle, displaced to the downside below the opening range gap and the first presentation, retracing back into the first presentation high, and sell side delivery was next. So if you take a look at this red level over here, that's your first TGIF level at the 20% of the weekly range for this week. And note how price is using all these levels to travel all the way down. So 10 a.m. macro over here created the true day high for that moment. Sell side delivery into the 11 a.m. macro. And what do we know about the 11:30 till 1:30 p.m. Time window? That IBDA likes to retrace back into the already established range inside the AM session to take buy side liquidity. Above here? Nope. If you look at 11:30 a.m., you just look for the closest buy side liquidity pool, which was this one over here. And over here we had some relative equal highs as well. So what is above these levels? The new day opening gap over here, the opening range gap over here, and the first presentation. And note again how beautifully these levels are used. Price stopped at the opening range gap consequent encroachment, trading all the way back down. And note how the old midnight opening range over here is used again. So over here price didn't trade into it yet, over here price didn't trade into it even, and we created relative equal lows just above the midnight opening range, tracing back up into the sell side imbalance, buy side inefficiency, boom, midnight opening range high of Thursday. So we displaced into the midnight opening range low, into the first displacement after midnight. Note how consequent encroachment is used here to deliver price into the 0.2 TGIF level, displaced to the downside again into first presentations high of Wednesday, and price even traded into the 0.3 TGIF level into the midnight opening range of last Wednesday. That was it for this week's market review for Nasdaq. So we had a beautiful up close week again, creating the low of week on Monday and the high of week on Wednesday. Some beautiful upwards price action on Tuesday as well. Thursday was rather difficult to trade, but if you take a look into this daily low over here and this daily high over here, you can see that price stayed inside the range of Wednesday, which is called volatility contraction. And volatility contraction is generally indicative for the very next day, which was Friday, to have a low resistance liquidity run. Note how the high of day was formed above the first day's high over here. Low resistance liquidity run into the TGIF levels, which aren't annotated over here, but into first day's low over here. And again, if you look into Friday's price action, yeah, we could capture some beautiful shorts over here. So that was it. I want to thank you all for watching this market review. Tomorrow I'll be back with a new market game plan for week 5. And I want to wish you a very nice weekend and an even better trading week ahead. See ya.